So, a question I get a lot is how can we supercharge our gains on real estate and really make it count? Because I got to be honest, the last few years, especially in Fall River, real estate taxes, insurance, water bills, all the operating expenses on properties have gone up dramatically due to inflation, right? Rents have gone up as well, but not as much as the expenses have increased. So, what we do with our clients is we advocate ways to hedge that and to protect yourself from inflation and set yourself up well in the future. So, one of the ways that we have is using a strategic Bitcoin reserve to supercharge your rental property gains. Now, you're probably looking at me like, Dave, what the heck are you talking about? All right, I get it. But hear me out. There's a reason why I picked Bitcoin. Okay. So, as we know, real estate is an amazing store of value. So, what does that mean? That means I buy a piece of real estate today, and over time, it's going to appreciate enough that when the future comes, what it's worth will offset any inflation losses had I just kept that money in the bank, right? It protects my future purchasing power. And what real estate has, it has two other features to it that don't exist in a lot of other assets, right? You can generate cash flow, and it has some amazing tax benefits the longer you own it. So, what if we could utilize that store of value, okay, and utilize the cash flow that it generates and take that cash flow and put it into another store of value that appreciates way faster than real estate does? So, you could almost have your cake and eat it too. And that's why we pick Bitcoin, right? So, real estate over time, 5, 10% a year, it appreciates. Bitcoin historically 50% a year gains. Okay. Some years it goes up 100%, some years it goes down 70%. It's a very volatile asset, but over time, it generally has appreciated roughly 50%. At this time, you can't generate cash flow off of it, but I think that's going to change in the future. But so, what I'm advocating for here and what we do with our clients is, and I have a couple of case studies I'll show you. But basically, that cash flow that you get every month from your real estate after you pay your debt services, your expenses, your vacancy rate, your repairs, anything that comes out of that, right? Whatever's left, take that cash and invest it in Bitcoin. So every month you're buying a little bit of Bitcoin over time. Okay. And that's your strategic reserve. So you're holding that reserve again, and you have your real estate asset, and now you have two stores of value that are growing. And I'll show you how fast that can grow, especially when you factor inflation. Okay. So here's a case study. The first one, say you own a 12-unit building in Fall River. Those units are bringing in 1,500 a month. So your total rents are 18,000 a month. Okay. After you pay your mortgage, after you pay your management, your water bill, your taxes, your insurance, you do some repairs, all that, you should be netting around $3,000 a month. Now, with the beauty of the tax benefits of real estate and depreciation, at the end of the year, you're probably not going to owe a lot of tax on that income, which is a good thing. Okay. So take that 3,000 a month, and instead of putting it in a bank or wasting it or spending it on something else, just buy Bitcoin every month. So at the end of a year, okay, your Bitcoin reserve appreciates. So you'll put about 36,000 a year into your reserve. Okay. So if you look at this chart, if you just put it in a bank, you'd have 36,000, 72,000, 109, 145, 182 after 5 years. Okay. Putting it in Bitcoin based on historic returns. And Bitcoin's a long game, right? So if you can sit in Bitcoin and hold it for 5 to 7 years, you'll perform well generally. Okay. So your Bitcoin reserve, factor in 50% gains a year over time, at the end of 5 years, you could be at $543,000 versus 182 in a bank account, right? But now you're like, Dave, but the bank account, there's no volatility. I'm not going to lose money. But when you factor real inflation at 14%, your purchasing power in 5 years of 182,000 at today's value, you're only going to get about $93,000 worth of stuff. And that doesn't go very far in a 12-unit building. You can't fix a lot. And you got to think over time. These buildings are 100 years old. You have capital expenses you got to do. You got repairs you got to do. So there is a way this Bitcoin strategic reserve can supercharge your future needs just by taking a little bit of a long outlook, right? Now, what can you do with that 550 in 5 years? You can take half of that and use it as a down payment on a $1.3 million property. So now you just got another property basically by just finding a better savings account. Do you see what I mean? That's how you can level up faster, right? And I think in 5 years, you won't even have to sell the Bitcoin. I think you'll be able, instead of taking a home equity line on your property, you might be able to take a loan against your Bitcoin. I really see that coming. So I think now's the time to really consider this strategy. Okay. So that works for, I think that's a way it can work for large scale investors. Now, what about a small scale investor? Some of the clients we have that have the most challenging outlook right now is that person who owns 1 3 family property. So you got 3 rents coming in. Maybe your gross rents are 5,000 a month. Okay, let's do the same math. After you pay water bill, mortgage, property management, insurance, taxes, repairs, somebody skips out on a month, you got it, whatever. You probably are getting about $150 a month. That's what you're left with in reality on a 3 family in Fall River. Okay. So not a lot. But if you play this game right and you do the same strategy, Bitcoin strategic reserve, that's 1,800 a year that you're putting into an investment. Okay. Now you can see how quickly that grows. So your Bitcoin reserve at the end of 5 years is 27,000. Okay. If you left it in the bank, you'd have about $9,000. And the real purchasing power is 4,600. There's not a lot you can fix on a 3 family for $4,000. Okay. So that's a way now where a smaller scale investor can really scale up by playing the long game. Now, over that 5 years, the 27,000 is not enough to put down on another property, but the appreciation in your 3 family at the end of that 5 to 7 year window, you could do a HELOC, right? A home equity line, refi, take some cash out. That's your down payment for your next one. Keep a little bit of that cash to start your reserve for your next property. And now you have more money coming in and you can build. And this is a way that you can supercharge your return over a number of years. And that's the strategy here. Okay. It's looking at different ways to combat inflation, use real estate, which is an amazing store of value that offers cash flow and insane tax benefits the longer you own it, and taking that and putting it into a faster store of value that's a harder asset, and growing and really like skyrocketing your gains and setting yourself up better for the future. Okay. So if this intrigues you and you're interested in this, let's connect. Okay. Our contact info's here. Come to the website, check us out. And I'd love to sit down with you and kind of run some scenarios and show you a way that you could supercharge your gains and set yourself up generationally for the future. All right, guys. Hopefully this inspired something in you, and I'd love to talk about it with you. Take care.